Deal Surgeons, Elite Masterminds, what's going on? This is Diamond Life. Just doing a review of basically, I guess you could call it a loss review, even though I didn't take a loss, but I didn't take the trade. And the scar tissue, I think, is the reason why the ICT talk about. So let me explain. So when the market opened here, the glitch in the matrix for this week, where is it? I have it marked up on here. Oh, Lord. Oh, this is a different chart. Okay, so the glitches for the matrix, the glitch in the matrix this week, I think was down here somewhere. But basically, I identified the glitch in the matrix also last week when it hit the glitch in the matrix that I identified was this level here, and I also identified another level that it didn't hit, which was here. But this is called a delayed glitch, meaning that the next week, if this is the true glitch, which it was, but also I have like a secondary number. I have a secondary number, which was this number, just in case it fails. I have like a secondary glitch. So this was the real one that should have hit last week, but I bet on that one, even though this is the biggest one. So if this was the biggest one based on the COT data, then usually it hit it the next week, which it did here. That's why I put delayed. So I should have went short on the open. The reason I didn't is because I thought it would retrace. I thought it was going to retrace to retest these highs first, or retest this order block here, the daily one, and then go down. So I guess I was being greedy, not want to catch it all. But I should have just went short because I also identified another level of that price would go to. And this is this turquoise line right here. This is a weekly chart. This is the weekly wick. Okay, let me show you on a weekly chart. Understanding the structure. Let me explain it to you. Turn the drawings off. So if we go to the weekly chart, we had a fair value gap or supply zone, whatever you want to call it. And we had now these wicks right here, the market look at the wicks, these wicks as gaps. So I asked myself, I said, okay, well, this is the weekly chart. So remember, this is the last candle I saw over the weekend, right? So let me pull it all the way to the right. This is all I saw. So I asked myself, I said, what do we have here? I said, we have a gap right here that has not been, I'm sorry, a gap right here that has not been filled in yet. This is a supply. We got 3 candles in a row. Okay. Price is fractal. This is on the weekly chart, but we usually do it on a 5-minute chart. So I said, okay, well, on the next candle, I was thinking like maybe it may want to come back up here and do an institutional entry order drill, which means ICT, meaning it would come back up and hit that zone. Did it do that? That's what I thought it would do. I thought it would come back up and hit this and then go down. So that's another reason I didn't go short, because I'm like, well, it hit this order block here, but no body of the candle closed into this body. So usually it did wick down to mean threshold, 50%. So that's another reason I didn't go short, because I thought maybe I was wrong. But looking at some deeper analysis, I actually saw this wick down here, and I said, let me delete this alert. I saw this wick down here, and I was like, okay, well, if this is the end of the week, if this is all I see at the end of the week, over the weekend, I was looking at the chart, and I'm like, okay, well, what's about to happen? If it's not going to fill in this gap, or at least come up here to touch it and then reverse, then what's the next thing that it could do? The draw on liquidity is down here, that wick down there, based on S1 draw on liquidity. But a lot of times it don't do that when it starts going to the order block. Sometimes it'll reverse, and this will be the draw on liquidity up here, that wick high up there. See? So I said, if I'm wrong and it don't come back up here into this fair value gap or this supply zone, this supply gap right here, this is a supply zone up here. I'm sorry, I'm saying this the wrong way. This is a supply zone, but I actually trade supply and demand based on the actual gaps. I call this a supply gap because this is the gap that was created from the supply, from this here. And this is an order block as well. So I said, if it keeps going down, then how far will it go down to? If I'm wrong about it coming up here, I said, well, let me split this wick up into 25s. This is ICT, 25%, 50% constant encroachment, 75%, and then 100% the wick low. So I said, okay, well, I did a little more advanced technology. I'm working on my own like proprietary trading type of stuff. And I've seen on my own proprietary trading technology stuff I'm working on, it said that it probably would come down. The odds of it coming down here to the 25% was a lot greater than it coming back up into this gap. But I didn't believe it. I didn't trust it because I'm just not working with it. So let's go back down to the 15-minute chart. Turn back on the annotations. So also we had an order block down here on a daily. Now we had an order block here, but you have to look at the lowest down close candle as well. And so remember, this blue line is the new week, symbolizing the new week. This is the lowest down close candle. So I should have known like that price will not reverse. I just thought like, okay, well, we hit an order block right here on a monthly chart. That's the higher time frame, but I should have known that we had a lower down close candle that was more important than this order block. Yes, we had a reaction off of this. You see that? It hit the order block on a monthly chart, the opening price. We had a short reaction, but it's going to respect the lowest down close order block, not the actual order block itself. So that's why I put, if I click on this line right here, it says, this green line, it says bullish order block, 1 month opening price, LDCC. That means lowest down close candle. And I've studied this heavily, so I should have known better. That price had to at least come down here to that order block before we had a strong reaction, which is what we're seeing now. Also, I had mean threshold, which is 50% of that order block marked up. So in the way that it just closed down below that order block, the lowest down close one, I should have known that it would go on lower. And my glitch in the matrix, I think, is somewhere down here. I'm looking at a different chart. So that's what these orange lines are. This is that wick on a weekly chart. This is a 0%, 25%, 50% consequent encroachment, 75%, and then the lower the wick, which is 100%. Based on my own proprietary trading, it showed me that the odds of it coming down here to 25% was a lot greater than it coming back up into that gap, which it might be trying to do right now. So I should have trusted that, and I didn't. And I just had to basically scalp every day. And I see price going down to the areas that I recognize, but I have been wrong in the past, and it really messed with my head. Okay, to be honest with you, the same thing happened last week as well. I identified the glitch in the matrix is down here, and then this area here, and I mean I actually thought it would come back up here and retest this zone right here. Okay, this zone is a zone that was broken, but it never got retested. So I'm thinking like, but I should have known that maybe it would have to come down to these monthly order blocks before it comes back up here. But these lines right here says old low that needs to be retested. So I really was just waiting for it to come up here to go short, but it just took off. And you know, I've traded short before, knowing where it had to go, and then it just do a hard retrace spike and then go down, and I just was all chopped up. So, but the good thing is I do know where it's going, which is glitch in the matrix, which I'm grateful for. Okay, very grateful for. So just like a loss review, and thanks for watching.